Hey everybody, so we are going to talk about two of my favorite real estate stocks to cover. They are Zillow and Redfin. And something interesting happened recently. Normally these two stocks kind of move in tandem with each other. If one does well, the other does well. But Zillow plunged recently and Redfin actually soared on the same day. So we're going to get into to why that happened in just a second. Before we do, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get a message from my sponsor, The Motley Fool. It is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. So let's dive right into it. So Zillow fell a little over 10%. And the reason, as you might expect, is earnings. And I'm going to bring up something on my screen real quick. So at first glance, Zillow's results don't seem that bad. The company beat on the top line. It slightly missed earnings expectations, but in general, it had a pretty strong fourth quarter, all things considered. You can see right here, it achieved pretty much all of its goals for 2024, double-digit revenue growth. It expanded its margin. It launched a bunch of new products, increased conversion, et cetera, et cetera. The multifamily market, which will come into play later when I'm talking about Redfin, it expanded the number of multifamily properties on its platform from 37,000 to 50,000 and increased the total number of rental listings by 20%. The rental market is very, very strong right now. The real estate market has been kind of agonizingly slow for a long time right now. But, the rental market is kind of helping both of these companies out. You can see right here that the full year goals were a little weaker than expected. Low to mid-teens growth. I mentioned Zillow's revenue grew by 15% year over year in the most recent quarter. So low to mid-teens sounds like a bit of a slowdown to me. They're expecting to have positive net income, not a ton, but that's definitely nice because they've been running a loss for quite some time. Zillow has not been a profitable business, at least on a GAAP basis. On an adjusted basis, it's profitable now. But on a GAAP bottom line basis, when you consider things like stock-based compensation, it's not that profitable right now. I mentioned the real estate market is agonizingly slow right now. So here are some charts that really illustrate that. Total transaction value, we're definitely at a trough right now. You can see, so the chart starts in 2000. Peaks right before the financial crisis up here. This is annualized transaction volume in billions. It's about $1.5 trillion of transaction volume there. Fell off a cliff during the financial crisis and bottomed and kept climbing and climbing. And during the pandemic years, as we know, when mortgage rates were 3%, home sales volume soared. But now it's kind of come crashing down, and here we are right now. So if you look at this chart, historically, we're at a bottom when you figure things like inflation and stuff like that. And a real interesting stat is in the average year since 1975, 4.2% of homes turnover in the United States. So if you have 100 homes in your neighborhood, in a given year, 4 or 5 of them will sell. Right now, we're at about 3%, which is near a historical bottom. So housing turnover is very, very low. There's a lot of pent-up demand because of the mortgage market, or the mortgage rates right now, excuse me. It's keeping a lot of home sellers and home buyers both on the sidelines. Home sellers don't want to give up their 3% mortgages. I certainly don't. And home buyers, because of high mortgage rates, they don't want to come into the market right now. Who can blame them? One of the reasons I'm really worried about Zillow in particular is that Zillow makes a lot of its money from the buy side of real estate, meaning buyer's agents. It's more than half of its revenue comes from the buy side of transactions. And that part of real estate is, I don't want to say under pressure, but it's definitely in flux right now and uncertain. Recent rule changes, now buyer's agents have to disclose their compensation to their clients. They have to let them know how they're getting paid. Before, it was just a given that to be listed in the MLS, you had to offer, your seller had to offer to pay the buyer's agent commission. That's no longer a thing. So now, it's more of a negotiation between buyers and their agents. And I don't want to be an investor in Zillow while that's going on, if I'm being totally honest. And it makes me kind of nervous about this business just because it's so reliant on the buy side of real estate. But all in all, Zillow is executing pretty well in a terrible real estate environment. So let me move right to Redfin. So Zillow's earnings, ironically, are what made Redfin go up. There it goes. So why did Redfin soar while Zillow fell? They announced a rentals partnership. They both have big rental businesses. Zillow has its own rental platform. I talked about it a minute ago. Redfin has its own rental platform and also owns rent.com and apartmentguide.com, which it acquired a couple of years ago out of bankruptcy. That at the time there was a company called RentPath that went bankrupt, and it owned those two properties. So now, under this new agreement, Zillow is going to be the exclusive provider of Redfin's multifamily listings. Multifamily is defined in this case as 25 or more units, so these are apartment buildings. So Zillow is going to be providing Redfin's multifamily listings for it. Redfin doesn't have to find its own listings anymore, so that alone is pretty nice. Zillow lists about 50,000 multifamily properties, like I said, each of those with over 25 units. So this will increase the reach and make advertising on Zillow more attractive to multifamily owners. It's expected to start in the spring. So why did Redfin soar? No financial details of this partnership were disclosed, but it seems fair to assume that Redfin is going to be receiving some sort of referral fee if a rental rents on its platform. Zillow provides the rental listings. If it converts from being listed on rent.com or apartmentguide.com, Redfin should get some nice fee income, and it creates a nice capital light stream of fee income for the platform. Anything that boosts income is obviously great, but anything that boosts income without a lot of capital investment is even better. So Glenn Kelman, Redfin's CEO, said in a press release that this should increase the overall traffic to Redfin, not just the rental site, but just increase viewership on Redfin and the profits from its rental business, which has been one of the big bright spots of the business in this terrible real estate market. So like I said, this is expected to begin this spring. I don't expect this to be a game changer for Redfin, but it definitely shows them kind of thinking outside the box, figuring out ways to increase revenue without increasing risk or needing to raise capital or putting their own capital at risk. So it's a smart move on Redfin's part. It could be a win-win for both in the long run, but Zillow's earnings just made the stock go down. If this had been announced outside of an earnings release, I think it would have been a positive for both companies. But it came along with a somewhat disappointing earnings release for Zillow, which is why that stock fell. I'd love to know if you're invested in Redfin or Zillow. Do you think one is a better investment than the other right now? Let me know what you think. I'll do my best to respond to all your questions and comments individually. And thanks for watching. See you next time. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.